Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, we got a bunch of questions here. From Joe, where do you think the dollar is going? Well, as a member of a self-directed firm, I'm really not able to disclose my opinion on the dollar, but I will say this, with the ISE options, you do have the ability to put in an opinion whether you're bullish or bearish or neutral on the dollar. The same things that you did with, that you can do with Google or Yahoo or anything like that, you can also do on the currencies. Question from Larry, how far out would you go in terms of the time decay? Well, like I said, it has a lot to do with your own personal situation. Like let's say that you are I just had a conversation recently with a member of my family, and he's a missionary. And he's actually really excited about eventually soon the ISE, I believe, is coming out with options on the Brazilian real. So he's actually excited about that one. But I don't know what, and I don't know the exact date for that, but I do know that I've talked with Steve about the Brazilian real options eventually coming out. But anyway, he's a missionary in Brazil. And in his situation, he has to go on furlough for a longer period of time right now because the U.S. dollar has not done very well versus the Brazilian real. And what furlough means is that you have to actually stay in the United States longer before you get your assignment. Now, I was talking with him, and ironically, I didn't mention this to him, but turned out the next day when he was asking me what I was doing, turns out he's actually a dedicated option trader. So, but when I was talking with him, one of the things that he could do would be to insure himself by buying a put option on a Brazilian real style of currency if it's traded the way that the ISE options are. So that way, if the dollar did go down versus the Brazilian real, he could insure his money. Now, how would he go about doing it, and how far out would he go? Well, let's say, for example, that he knows that he's going to come off of furlough in the next 3 months. What he could do, and let's say that that $10,000 is what the underlying is on this Brazilian real mystery currency option that doesn't exist yet. What he could do is buy a 3-month out put option, and that way, if the U.S. dollar does tank over the course of the next 3 months, he's hedged. He just bought insurance, and he is hedged. So that way, from the standpoint of currency risk, he is covered. Now, keep in mind, if maybe he didn't get as much support because not as many people were donating to him, or maybe the church had an accident and there was some type of weather storm that hit it, or whatever, he's not protected in that way. But in terms of currencies, he would have been protected. And I would say in his situation, if 3 months was his furlough time frame, then 3 months would be what he would need to do. Which currency pair correlates with the Dow Jones? I don't believe that the ISE has a currency pair that correlates with the Dow Jones. I used the S&P 500 today. I used the S&P 500. You could have done the same thing on the OptionsXpress website with the S&P 500 or DIA for the diamonds. You could have done it the same way that I did it. Okay, from John, what is the best way to benefit from a falling U.S. dollar over the next year or two? Well, I'm going to give you my answer that I'll give everybody. Well, it depends. How confident are you that the dollar is going to fall over the next year or two? And let's expand upon that. If you believe that the dollar is just going to fall out of bed sometime within the next 10 months, and you think it's just going to go down and it's just going to be in a horrible state of panic, then the way with which you'll make the most money would be to buy out of the money put options over the course of the next 10 months. Now, keep in mind, as I've said earlier, you have an upside and a downside to every option trade. If it goes down, but not quite as far as you think it's going to go, then you're going to lose all your money, and you have to be prepared to take on that risk. So if you're not completely right, if it goes down but not down as far as you think it's going to go, then you need to take on that risk. Now, let's say, for example, that you think it's only going to go down a little bit. You can buy put options, possibly in-the-money put options, or maybe at-the-money put options over that time frame. In terms of the ISE, the options go out 10 months. I believe that's where they're at right now. I'm pretty confident that 10 months is the longest time frame for the ISE options. So in terms of doing that, 10 months will definitely cover your time frame for the next year. I would just suggest watching a webinar on strike price selection. And I know there's plenty of archived webinars on the ISE site. I know they have them on the OptionsXpress site as well. But I would look up something on strike price selection to help determine that.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.